I think it's pretty risky to bet on any one treatment at the moment. I think the broad contours that we see with the sheer number of different vaccines that are being tested and the speed with which healthcare companies have reacted to this challenge is very encouraging certainly for the medical situation and for investors in the long term. Like, healthcare innovation is absolutely one of, I think, the trends that are going to dominate this decade. But you really need, I think, expert, detailed, active management in this sector to try to profit in the long term, because who knows if they're actually going to be that positive or not. I know the news is very good today. Very hopeful that this brings some salvation to the medical situation. But right now, I think that it firstly is in the price for that particular stock, and secondly, we simply are just not going to know who's going to win this race going forward. I prefer a broader healthcare exposure with expert asset managers in that sector.
David, I want to talk about hope and optimism coming from another quarter of the market too, and that was from China today. Despite a very steep fall in GDP in the first quarter, year-on-year, at 6.8% plunge, investors are saying, well, it's so grim you might get authorities doing even more to provide support. Is that your interpretation about how investors should be thinking?
Well, absolutely. The longer that China's economy remains severely depressed, the greater the probability of a major stimulus program. And I think, Karen, under the headline numbers, there's some really interesting patterns here. If we look, it's quite clear that the industrial production side of the economy is returning to normal fairly quickly, but the consumption side is actually quite limited and quite slow to get back to normal. And I think that suggests potentially a behavioral change amongst Chinese consumers, some concern about the virus going forward. And if the domestic economy continues to lag, you may see a more broader-based stimulus program than you have seen so far. They've done a lot of things so far. They've cut reserve requirements. They've encouraged more local government bond financing, for example. They've cut some taxes. But we haven't seen the big bazooka of support. I do think, though, if the evidence builds that it's hard for China to get back up and running, and it's going to be difficult because the global situation is going to be very challenging. Exports are still important for China in themselves, but also on the employment side, we see a lot of multinational companies right now laying off employees in China because of the bad global situation. So absolutely, we'd expect the Chinese government to do a lot more if the economy remains depressed.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.